What's going on, guys? It's your boy NTG back at again with another video. In today's video, I'm going to be showing you guys how to trade support and resistance in 3 different ways, right? These are the ways to trade support and resistance that the big banks do not want you to know. All right, guys, we're going to go over support and resistance zones, dynamic support and resistance, and using support and resistance with trend lines. Okay. I can confidently say this is going to be my most detailed video that I posted on my channel. This video is going to be about 30 to 35 minutes long. So make sure you guys are really paying attention. You guys are taking a lot of notes. All right, guys. If you guys want me to do more videos like this, make sure you guys hit up that like button for your boy NTG. Make sure you subscribe to the channel for content like this. I'm going to be uploading a lot more content like this. I have a Sunday analysis coming tomorrow for the markets. I also got a money management video and of course more videos to come out just like this. All right, guys. So also make sure you guys hit post notification on. You guys can follow me on Instagram and all my social medias. The link is in the description below. You guys already know how we like to do it. We're gonna roll the intro, get straight into the video. Let's get it. All right, guys, so we're back. All right, so everything pretty much that I'm going to explain, most of the time I'm just going to be drawing it out so you guys can get, that detailed picture of how we're going to trade support and resistance using the zones, the trend lines, and dynamic support and resistance, right? So first of all, let's go off of trading support and resistance on zones, right? So what do you want to look for as far as like when you get to these major zones, right? Well, firstly, you want to look for confirmation. Obviously, you don't want to just get to these zones and buy and sell, right? So for example, right, let's say we have a nice support here. All right. And there's 2 ways we can trade this, right? We can trade this during the trend continuation. So let's say we are in a very bearish market, right? How we be able to trade the continuation is we look at market structure, right? We don't want to just trade the reversal because here the market is creating low highs and lower lows. I'm going to go ahead and switch that, and lower lows, right? So market creates another lower low, and then it'll create another low high, right? You can take out your fibs, you can mark up just to confirm that retracement right here. So you know that the market is creating beautiful low highs and lower lows. And what you'll do is you'll wait for that break, right? To retest, and you continue to the downside, right? But it's not only you just, buy and sell these things. There's a lot more that goes into it. But when you guys are here, right, creating that low high structure, you want to make sure that you have confirmation, right? So once you get back into the zones, right, you want to look for some sort of a confirmation to actually get into the continuation. And I like to trade the continuation because a lot of new traders don't know, right? When they come into the new trading world, one of the first things they see is support and resistance zones and trend lines, right? How to trade these things. And they get the impression that you just buy a support, sell a resistance. But they don't realize when you're in a heavy, trendy market, there's actually a better chance of the market breaking the support and resistance than actually showing signs. All right, and once it shows signs of support, then we're gonna talk about that too. But most of the time when markets are trending, right, and new traders don't understand lower low, low high structure, swing highs and swing lows, they just start buying, right? They add a buy position right at the support, thinking that it's going to reject it and continue up, right? But then what happens is it just continues to tank, and traders are so confused, right? They're like, oh, I thought you're supposed to buy support, sell resistance. Well, there's a lot more to it than just that, right? So when you guys are looking at the market, right, you want to look at the market itself, right? Is it trending, right? Is it trending? If it's trending, what you want to do is you actually want to trade the break and the retest, right? So let's say we're back in the market right at the support zone, right? Most of the time what happens is the market will probably reject once, right? It'll show one sign of rejection, giving us that nice bearish candle, right? So let's actually draw this out. Bearish candle right here. And what's going to happen is the market is going to react. Let's drag that out so it's even. Good. No, my line is not straight. There we go. All right. So what's going to happen is the market is going to come here and you're going to see the market push down. And then it's just going to show like a nice little wick here, right? Normally what happens is the market tests that support, right? It will show some sort of signs of support right there. So let's go ahead and clone that. So it's going to show some signs of support, right? So it's going to be blue. And this is when traders start to that's when they start to buy without knowing what's going on in the market. They start buying, and like, oh, okay, it's going to push back up. It's going to push back up, right? And it's pushing. And then what happens is the market starts to do this, right? Starts to give you that long wick. And then now we got a nice break here. Boom. Now the market is continuing to the downside. And how you want to trade this is you want to wait for confirmation. And my number one confirmation, you guys know, is to 1, 2, 3 engulfing, right? So what I like to do is when the market is pushing hard like this, right? And I see a nice break. Now I know what I want to do, right? So now I want to wait for that retest. So as you guys know, the markets here, right, for a bearish candle, the open is at the top and the close is at the bottom, right? For bearish candles, the open is at the bottom and the close is at the top. So we know now that we had a break and close of the zone, okay? So we're here. This is our next candle. Let's not put them too close together, right? So the candle was pushing down more, right? It was pushing down, and then this is also where traders mess up. They just start selling here, right? Without any confirmation. So now it starts to push back up and it's giving us nice bearish candles, right? So boom. Then I'll just wait for my next candle. I like to see rejection, right? So I would like to see the zone get touched and show signs of rejection. So we're here in the market. It would be pushing up. Traders think, okay, it's starting to come back. It's starting to go back bullish. And then what happens is it shows a nice wick. And then it closes, right, below the zone. It will close below the zone. And then the next candle will be my confirmation to get into the trade, right? It will reject that zone one more time, right? So it will give us another bullish candle. It will start to seem bullish, and then what happens is it gives us that rejection right off of the price. And I'll get like a nice long engulfing candle here. And that is my confirmation right here to get into the trade, right? Because you guys know I like to trade the 1, 2, 3 engulfing. So I get one candle, one bullish candle, right? This is for a sell, right? Then I'll get a second bullish candle. And then my last candle, which is bearish, has to engulf the number 2 candle. And that's my confirmation here to get into that sell, right? Because I'm looking at market structure and I'm seeing that it's in trend. It's in a strong bearish trend. So I don't want to go against that trend. Like the saying that trend is your friend. You don't want to go against a strong trend, right? And just start buying. It's best for you to wait for the market to create a lower low, low high, lower low, low high. What happens is it creates another lower low, comes back to that low high, right? And then it gives you some sort of confirmation. And most of the time that low high is right at the zone of that support that is now resistance, right? There's a big thing where market structure loves to become, right, support first, and then it breaks and it becomes resistance, right? Same thing for a resistance line, right? It becomes resistance, right? We get resistance off the zone, and then it becomes support to continue to the upside, right? So that's the key thing you guys want to recognize as far as when you guys are in the markets, right? You want to look at the market and you want to say, okay, it's a trending market and I do not want to go against that trend. So let me wait for break confirmation, right? And then I get my Japanese candlestick confirmation to continue to the downside, right? And these are the best ways you want to trade support resistance on the trending market, right? Now, NTG, how can you trade support and resistance with reversals? Well, let's look at reversals, right? This is the kind of structure you want to see when it's ideal, right? When it's the most optimal to buy or sell, right? To buy at support or sell at resistance, right? The most optimal way, right, is, let's say again, we're in the downtrend. We're creating lower lows and lower highs, right? Now, what normally happens is the market will struggle, right, to create another lower low. So sometimes it will look something like this, right? And then we actually break, right? We break previous low high structure. These are the two big signs that the market is going to reverse, right? The struggle of breaking of lower low, or if you're in the uptrend, the struggle of breaking higher highs, right? So we're struggling to break our lower low zone and we broke previous low high, right? So these are big signs of reversal. These are the type of signs you want to see, right? That is the most optimal time to start actually getting into some reversal trading, right? So once I see signs like this is when I start to transition into, okay, when we get into that zone again, right? Because we're past the retracement. If you draw fibs, we're past the retracement area, right? We locked and closed above the 72. So this is not retracement. This is starting to be signs of reversal, right? So once I get back into that support zone, right, and this starts to play as support again, we just push down a little bit further, right? And normally what I like to also look for is wick rejections, right? So the market touched the support zone, right? It touched that support zone, looking very, very bearish, right? Looking very bearish. It looks like it's going to continue, but then it gives us that long wick like this, right? And it gives us a doji. These are like beautiful, beautiful confirmations right here, right? That first touch of that zone, and then boom, the market rejects it immediately, right? And then we test it again, right? It gives us an even longer push, right? It gives an even longer push. So we're here in the zone. Well, let's actually go here. There we go, right? So it gives us a longer push. So it gives us a longer push, right? And it's like, okay, yeah, it's definitely going it's definitely going bearish, right? It gives us a long push, and then it gives us another rejection right off of the zone. So we got 2 rejections here, right? So like, okay, this is a great sign, right? Even above the zone, right? And you're looking at the market and you're like, oh, this is a great sign that is giving me to start getting into a reversal, right? And then not much, it didn't touch the zone too much, right? But what happens is it gives us like another bearish, right? It's looking bearish, bearish, bearish candle. And then boom, it starts to go bullish, right? And it gives us that nice confirmation to start buying. This is the most optimal time you want to start buying the market, right? We had a trend in the market. The trend did not continue, giving us a nice like a double bottom, right? It did not break low structure. Then it broke previous low high structure, right? So once we get back into that zone, this is ideally when now you want to look for reversal trading. And another way to trade, support and resistance with reversals is when the market is consolidating, right? So I'm just giving you guys the different scenarios on how you want to trade support and resistance this way, because these are the most optimal ways, right? So this is another way, right? We can look to trade support and resistance is when the market is ranging, when there is no trend, right? We're just going up, going back down, going up, and back down, going up. And so these are the best optimal times to start trading support and resistance as well, right? You just wait for your confirmation. You can sell, you can buy, right? Because the market is ranging, so there's no pressure, right, that the market is going into. And the market is going to continue to range like this until, of course, it breaks either to the lower or to the higher side, right? And you can take advantage of a consolidating market like this, trading the range and just waiting for those confirmations, right? Which is my Japanese candlestick. Whatever your confirmation is, that's what you want to wait for to continue to trade that support and that resistance here, right? Same thing here. All the same thing as far as in a bearish market, right? And we can go over quickly, right? A bullish market, right? So let's go ahead and get the example of a bullish market. So we're making higher highs and high lows, right? Now, you guys tell me, once we get back to this resistance, right? Do we want to wait for continuation, or do we want to look for signs of reversal? Okay. And if you said signs of reversal, very good. Okay. We did not break, right? We struggled to break previous higher high, right? And then we broke previous high low, right? So if we draw this out, we had a nice higher high here that did not break, right? So we didn't break higher high. And then now we broke previous high low. So if we were to draw fibs from here, which we're supposed to do from the high low to the high high, you'll see that we are beyond that retracement level, right? Beyond the retracement level. So this is going to give us our key sign for a reversal. And then all we have to do, of course, is wait for our candlesticks, right? So in the bullish market, we want actually 2 bullish candles and 1 bearish, right? 1 bearish engulfing. So market is here. It gives us that 1 blue candle. This is the first one, right? Right off of the zone. Boom, right? That's 1. Come around again. Gives us that second, right? It gave us that push up. And then now we see signs of rejection here, right? That's 2. And then one more time here. See if we can grab that. Yep. So it looks like it's pushing up, giving us a wick. And then we get that confirmation for a sell, right? And then of course, if the market was continuing to make higher highs and higher lows, we will trade the trend continuation. Okay, so these are the ways that you can trade support and resistance at zones. Okay, at zones. I know a lot of traders that get into the markets, new traders that get into the market, and they see these things, right? And they don't understand that there's more to it than just buying and selling, right? You have to look at trend, overall direction, market structure. Is the market ranging? Is it in trend? There's a lot of different things you have to look for. Japanese candlestick patterns, right? Wick rejections. There's multiple things you have to look at in order to use the optimal way to trade support and resistance zones, right? And then we're going to go over one more way that we can trade support and resistance zones, which is one of my favorite, is chart patterns. Okay, so we're going to go over to the charts to actually go look at that, right? So let's go ahead and go to the charts, and I'm going to show you guys one of my favorite patterns to trade at support and resistance, right? All right, guys, so here we are on ETH, right? And as you can see, we hit the all-time highs for ETH right at the resistance here, right? So we drew out our resistance, right? Now once we got to this resistance, right? All right, guys. So you can see here, we have that same scenario, right? We're creating higher highs, high low, higher high, high low. Now you guys see that difference, right? That we created that high that didn't get broken. And then we have the break of high low. And this is live market time, right? So what you can do is you can look for chart patterns. And what I see here is a descending triangle, right? So this is perfect. So a descending triangle is a bearish pattern, right? You have a trend line of resistance that are making those lows and then lows and then lows and then lows. And then we have a zone of support right here. And we have a nice chart pattern here. A very bearish chart pattern right at first, giving us multiple confirmations, right? Which is at the resistance area, right? Then we had the market structure could not break previous higher high. It broke previous high low. And then it continued right at the resistance zone, right? We have a bearish pattern here. And if we go to our higher time frames, we can look for candlesticks, right? We're getting a nice rejection on it. Soon, we could actually get a 1, 2, 3 engulfing if we break the zone. And there's still 11 hours left here. Okay. And what we'll do with a descending triangle, right, is we'll wait for the break of the support. Break of the support, you can enter right at the breakout or wait for the retest and then the continuation to this downside. So this is our ideal setup on trading support and resistance zones. This is how you can see using the chart patterns here right at the zones, and you can get those confirmations, and then you can trade the market this way. And these are the most optimal ways that you want to trade the market, right? Now, can this go ahead and break to the upside? Of course it can, because at the end of the day, you know, we're not in control of the banks, right? But we can use the most optimal strategies just like this to get into the markets where the big banks are trading, right? We want to be able to trade, and we want to utilize our advantages here, all of our strengths. We want to utilize our edge over the market this way. All right, guys. So this was just a quick example of a chart pattern, trading it at the zones. Now let's go ahead and look at dynamic support and resistance. All right, guys. So now we're here. Now let's talk about dynamic support and resistance. So what is dynamic support and resistance, right? Dynamic support and resistance is the use of the moving averages that you can find areas of support and resistance, because moving averages can act as support and resistance as well, and you can trade them for trend continuation. I like to trade them personally for trend continuation, but you can also catch great reversals, right? And we're going to talk about the dynamic support and resistance, kind of like the same way how we can confirm trades in the market using, the zones, right? So we're going to use the same way for dynamic support and resistance, right? So what you want to do is you can add any moving average. It doesn't matter. Any time frame, the settings, whatever, right? But what I like to use is the 100 SMA. I'm going to be using the 15-minute chart for an example, but I do like my higher time frames like the 1 hour and the 4 hour, right? But I was just getting more signals to get in and get out on the 15-minute, right? So normally what you want to look for, trend continuation or reversal trading. So here, for instance, right, we're going to look at some reversal trading. So we actually had a ranging market, right? So it's ranging. We're getting sells. We're getting a break of the SMA, not giving us confirmation for buys. And then we had another break here. And then we had the retest of the SMA, right? Giving us a confirmation for sell, right? So you want to utilize that break and retest for that reversal trading to get into the sell. As you can see, the SMA gives you a great entry, beautiful entry, right? Gives us a beautiful entry to continue to the downside. A huge drop. And you guys know I love to trade. This is how I like to, my old strategies when I used to love re-entering the market with a smaller moving average, right? So this is how I love to scale into the market using my 15 EMA. My OGs remember this strategy right here on gold, right? I'll just use that 15 EMA because I love it because it's hugging price tight and it will get me those nice re-entries. You guys know that. And we're continuing to the downside, right? We had a nice bearish trend. Now we're starting to reverse, right? And as you can see, we had the break again, and we had the retest, giving us confirmation for a buy. Beautiful right here. You bought the market, you just waited a little bit, and then again, it gives you those nice entries, nice long entries here. Again, a break, retest, beautiful sell. And you can look for confirmations this way. You can trade the reversals or you can trade the trend continuation, right? So now we're in a downtrend. We're in a nice downtrend here. And what we can do is we can look for the trend continuation, right? And we can look for the retest, right? So we're in a downtrend here, creating that pattern. And then we get the retest here again for that trend continuation. And we can sell. We can continue to sell down, right? You guys want to use that EMA right there for re-entries. This is just normally how I like to trade. I'm just explaining just small details on how you can trade support and resistance, right? Then we come back to the SMA. We get a break, right? But we come back to close below it. And then it gives us another confirmation right there to get into another sell, and the market drops, right? And I wouldn't rely on dynamic support and resistance alone, right? You can trade the indicator with it alone, but you would definitely want to utilize more confirmations with the dynamic and support and resistance, right? But trading this alone can be very profitable, right? But not for new traders, because for new traders, they kind of get like mixed signals. They're not really familiar with the market. And so what happens is when the SMA starts to consolidate, right, and it's giving you multiple signals to buy and sell, traders get confused. They don't know if they want to buy. They don't know if they want to sell. And they're not familiar with the market structure. They're not familiar with price action. So you want to just work a little bit on more confirmations using dynamic support and resistance before you utilize it. But moving averages are great tools. They're great, like if you're using the crossovers, like 2 EMAs, using the crossovers for confirmation. If you're using chart patterns with the EMA, so you have the break of the chart pattern or the break of the zone with the break of the EMA, that will give you more confirmation. You can just use it simply for trend direction. Like if you want to just know if you're in a bullish or bearish market, that's also great ways you can use the moving average. All right, guys. So dynamic support resistance, very, very simple, very simple concept. You know, you can trade it with the trend continuation, or you can wait for the break, the retest of the SMA, just like support resistance zones, and you can trade it that way, right? So let's talk about the last thing that I wanted to cover, which is support and resistance with trend lines. Now, this is a very rare breed. I don't see any traders trading this way, but I do like to draw out my trend line, support and resistance, right? And I like to confirm it with my zones. So let's go ahead and take a quick look at trading the trend lines, right? So what happens is the market likes to create trend lines here as support and resistance. Now, you guys see we had a nice chart pattern here. So let's just draw that out, right? We had a nice flag pattern here. Nice flag pattern that broke structure here and then tanked to the downside, right? And this is what I mean by, you know, confluence your dynamic support and resistance, right? We had confirmation here and then we had a break confirmation, right? But for trend lines, right, normally what happens is traders don't actually, you know, see the support and resistance that these trend lines can play, right? What I like to do is I like to extend it out, right? And there are cases where the trend lines, instead of the zones, the trend lines can act as support and resistance, and you can use the zones to confirm these trend lines as support and resistance, right? Because we had resistance here, and you guys see how that evens out with the trend line. So we know that where this trend line is at the most optimal place for us to look for confirmations for buy and sell, right? And if we extend it out more, as you can see, the market is reacting to the trend line, right? Because if we look left, we don't have any zones, right? We don't have any zones. And I love using these as reference, as guides into the market for me to continue to the downside, or I wait for the break of the trend line, retest it, and continue, right? Because trend line breakouts are they get you in some beautiful sells, right? On trend line breakouts, I have my best days on those, right? So we're looking at just the support that we can build off of the trend line, right? And normally what happens is we break it. It's the same concept, right, as zones. When you break a support, it becomes resistance. So the same thing with the trend lines, right? We have a trend line of support. We have multiple touches with confirmation. We have wick confirmations. We broke the trend line. Once we came back to the trend line, right, with the zone, right? So we having two confirmations. Not only do we have trend line support that's going to become resistance, we had zone support that can also become resistance. So we're just like adding confirmations, right? And that's what you want to do as a trader. You want to keep adding confirmations. So you have 3, 4, 5 different signals for confirmations that's going into the same direction, right? And these are optimal trades. These are quality trades. And that's what I tell you guys all the time, is it's about quality setups. It's not about the quantity, okay? You don't have to trade 100 times. You don't have to trade 50 times. You don't have to trade the market every single time. You have to be in the market 24/7. No, you can literally trade once a week. You can wait for that quality setup, right? Because I don't trade that much. I trade 2-3 times a week max, right? And I just sit in the market and I wait for my quality setups. My members know when I'm in the Discord, I'll send out my analysis and they'll say, hey, NTG, what are you looking at? And I'm like, I'm going to wait on the 1 hour. I want a quality setup. And they know I stress that so much. Quality, quality, quality. And that's what's going to improve your trading when you start to take quality setups, not like iffy setups that have 1, maybe 2 confirmations. It doesn't look that great. That support is not that strong, but you know, I want to trade, so I'm just going to place a trade anyway, right? You want to have quality setups. And once we got back to these zones here, you can see that we're having a lot of resistance here, resistance. Now, we didn't get any confirmations, but as you can see, the market did react to it. And let's see if we can actually get some sort of reaction here. No, we didn't get up there. All right, so let's see if we got up there. I'm just dragging it now. But let's see. Well, let's see if we got up there. I want to say we got close. Yeah, we got close. We got close there, but you don't want to force it. We could force it here, right? Off of that support. But we don't want to force our setups right here, right? But you guys kind of get the idea of, you know, now how to trade support and resistance zones, how to trade dynamic support resistance with, you know, multiple confirmations, adding more confirmations, using the chart patterns for confirmations, and how you can draw out trend lines as support and resistance zones. Okay, so you want to look for those 3 optimal ways. You don't have to do all 3, obviously. I don't recommend doing all 3. You know, you don't want to confuse yourself as a trader. Just stick to one thing that you like. If you're a trend continuation trader, trade the trend continuation. If you're a reversal trader, trade a reversal. Okay, you guys want to use these at your most optimal time, and you just want to pick what best works for you and your schedule, right? Because that's what makes a trader, is when he's able to fit his trading plan with his trading schedule. All right, guys. So I hope you guys enjoyed the video. I'm pretty sure this is going to be about 30 minutes long. I want to make more videos like this. If you guys would like for me to make more videos like this, you guys already know what to do. Like up the video for your boy NTG. I want to definitely drop some gems like this all the time on the channel. All right, if you're new to the channel, make sure you subscribe to your boy. I'm gonna have more videos like this. I'm gonna have that analysis video posted tomorrow, and money management, right? We're gonna go over how to actually properly risk, because a lot of you guys don't know how to properly risk your account. You guys are doing calculations and, oh, and see, this is 2% of my account, right? And then I look and it's like, no, that's actually 20% of your account. So I want to make sure I clear up, you know, how to actually risk, you know, how to do basic math and calculate your risk properly on your account so that you are not blowing your account. All right, guys. So it was your boy NTG. I'm going to see you guys in the next video, and I'm out. Peace.